Adam, your fund invests internationally. Why look abroad when things have been doing so well in the United States over the past 3 years?
Yeah, I think there are some upcoming catalysts that are going to be very beneficial to international equities. In particular, over the past 15 years, shale energy has really sucked up a lot of investment from the rest of the world, which has really reduced growth. As shale is peaking, those investments are going to go abroad and growth is going to start expanding internationally. And this is going to be the first time in 15 years where international equities will start outperforming US stocks.
So specifically, which regions do you like?
So Latin America right now, because it's a lot of commodity exposed countries, but there's also a big shift in capital allocation happening. And that's what we really analyze. The big shift right now is how governments are allocating capital. They're shifting from social programs more to investments, and that's going to increase growth for a lot of countries.
Can you explain a little bit more how you invest over at Vaughan Nelson? What are your strategies?
Yeah, so we've got US large cap, mid cap, small cap, international, and emerging markets. We're a high active share manager. We run very concentrated portfolios, and we're really focused on capital allocation. So what matters to us is how companies are allocating capital. We build it up to industries, we build it up to countries, and then we look at return on invested capital trends to see if there's too much capital going in or too less.
Well, there's a lot of capital going into semiconductors and the AI trade. What are your thoughts on that?
Yes, and this is a very interesting time because there is a huge investment boom right now in US technology. What we see right now are actually over the past 3 quarters, ROIs are actually improving at the Mag 7, but they have also converged. And a lot of the value is being extracted by OpenAI and NVIDIA. However, we're seeing some improvement, which, we're only 18 months into this big investment boom. It could be that we're still early in this AI trend.
So you want to stick with the Mag 7 and the AI trade?
Yes, until we see ROIs fall, I think you stick with them. Now, one caveat, the ROIs are less than what they were in the cloud, and that's because there's only a few buyers this time. ChatGPT, Anthropic, there's only a few buyers of compute, and that's very different than cloud where there are thousands of buyers. And so the bargaining power has shifted in the industry.
And outside of the AI boom, there's also a lot of talk about investing in infrastructure, especially a lot of the private market asset players are involved in infrastructure. What are your thoughts on that sector?
I think it's pretty interesting, but what I know about technology firms is when there are bottlenecks, they solve for them. There are a lot of things they can do in power, analog, semis that could drive a lot more efficiency. And I think we're still at the very early innings of driving that innovation, right? So we haven't even moved to vertical power on the semi chips. And I expect that to happen with Rubin and some of these generations, which should improve power.
And then finally, what are your thoughts on energy, specifically oil? Stocks have done great in the US over the last 3 years. Energy oil has not done as well.
I think right now there's an illusion of abundance. If you break down, and this is what our capital allocation team does at our firm, we have broken down all the investments of the top oil and gas companies around the world. Since COVID, they have generated an excess of $1 trillion of cash flow. 60% of that went to dividends, 25% went to buybacks, and the rest went to chemicals and renewables. None went to oil and gas. And the industry has been really dependent on shale because it's a very unique asset because it has a lot of flexibility. You can get oil production pretty quickly in a few months. The rest of the world, it's not like that. You have to build the infrastructure. It takes years. And so right now, the industry is very, very complacent. And we think that's creating for a huge upswing in oil prices in the next few years.
All right. Well, thanks for coming on and talking about it.
Yeah, thank you for having me.